Hey traders, this is Taylor with the Trader's Brain, and welcome back to our series on edge. And this is a series where I talk about the edge that I use in my own trading. And I've got a series of videos. This one today is going to be on rhythm. All right, just as a reminder, this video is for educational purposes. Please take a look at this disclaimer and make sure that you fully understand it. Also, this is part of a broader series. In fact, this isn't the first video. If you haven't watched the first videos, please take a look at those before you watch this one. It's really important to understand the context of where this fits in the overall trading framework that I use. And because one principle builds upon another, which builds upon another. It's very hierarchical in nature. So take a look at the earlier videos. Here's a link to the playlist that you can click on and go see the entire set of videos. Okay, now I know that you've seen this several times if you've watched the videos. I just want to review it again because it's so important. The framework I'm using is called NADRO. It was developed by Merritt Black at Apteros Trading. He runs a prop desk, so he is a professional trader. This is a professional trader's framework, and I've probably mangled it a little bit from what Merritt talks about and teaches. So if you want really the best course is to go to apterostrading.com and take a look at what Merritt has in terms of training resources. But I'm going to try to give you guys as much as I can in terms of how I use this particular framework. Now, narrative is the top level. It is the most, one of the most important parts of this is to understand across multiple higher time frames, what does the market want to do? Where does it want to go? Where has it been? What are some key areas? And what inflection points might I look at and rely on today? What's my directional bias? So there's some ways that we evaluate and look at the market that gives us answers to those questions. And those give us the kind of the high level understanding of where we might want to trade. Acceptance tells us when a particular area or line in the sand is in play for us. Developing value is what happens between some of these areas and offers us opportunities to trade, even though we may not be perfectly at a line in the sand. It gives us more opportunities to trade as value develops during the trading session. Rhythm, which is what we're going to talk about today, helps us to time entries. Now, as we get lower and lower and lower, we're getting closer and closer to trade execution. So where narrative, you're kind of getting an understanding of what's happening in the market, where is it going, what are some key areas, and down all the way down to order flow, which is how do I precisely time entry of my trade. Rhythm is very close to that. So rhythm is, we're kind of getting into this area of how do I best, find opportunities to get into a trade? How do I access certain trades? Rhythm is also used with acceptance. So I'll just kind of briefly go over that one at the end. But so last time we talked about acceptance being time or distance related, but there's also a component of rhythm as well. All right, so what is rhythm? Very simply, rhythm is just the natural movement of the market. So as you see the market move up and down, right, this is rhythm. And you have different levels of rhythm. So you've got, like long-term rhythm, so you've got this move that comes down here, this move that comes here, this move that comes here, right? And so you have this kind of rhythmic moves in the market, and you can look at them on lower and lower time frames or levels, and even down to the micro level. Right. And so we want to kind of understand, the rhythm that meets kind of our risk reward tolerance and what we're looking at as an example. Now, the tools that I use are really simple. I use RSI, right? And I also use my brain. So very simple tools, especially my brain, extremely simple. Now, what I'm looking for with RSI is I'm looking for movements above or below my overbought and oversold bands. So anytime the RSI goes above, I'm looking to go short. Anytime it goes below, I'm looking to go long. But remember, it's always within context of my narrative, acceptance, and developing value first. So those things come first. And then I look for rhythm to help me better time my location and my entry. And of course, order flow, where I get the precise execution. Now, a lot of times I can just use my brain to do this. I can look at, just the natural rhythm of things and kind of get a better understanding of where I might want to trade, right? Like this is nice rhythm here and this is nice rhythm here. I can see that. But I find that RSI is just a little bit more of something that I don't have to question. Like, oh, did that go deep enough? Is that low enough? Is it going to go down a little bit and test a little bit further? So RSI gives me that a little bit extra, insight into these pullback moves that are happening. Here's an example. So we've actually just been looking at this chart on kind of a small level. Now we'll look at it on a big level. But if you take a look, you can kind of see the rhythm. We kind of come down here. We've got this big move here. We have this right here. Like I wouldn't say that that's really good rhythm. I wouldn't necessarily be looking to go long right there. Maybe others would, but that just seems like a really shallow pullback to me. But as this comes up here and then we do this again, this might be okay rhythm, right? But definitely this is better rhythm, okay? And what did I lose, from maybe going long right here to going long right here? It's not much, right? But I certainly have much better confirmation over a number of other tools that I have here, okay? And like I said, like rhythm is always within context of your narrative and what you're looking to do. So in this case, remember I've got a bullish area. I have acceptance above this bullish area. I come down into it, kind of testing it, and I reject, right? And then I have this change in remember I talked about this in our developing value. This is my moving average crossover where I went from red to green. And now I have this beautiful RSI oversold condition here that tells me, hey, this is probably a good time to go long right there. So this one has a lot more things going for it from a trade perspective than this over here, including better rhythm. Okay. Let's take a look at some examples. So January 14th, 2022. Let me go through and talk about narrative. So in this case, I don't think I had I don't think I took a screenshot of where my narrative arrows were, but more than likely, I can just by looking at this, I can tell you I was probably, very rotational and very cautious when I have these structural areas really close to each other like this. So just really choppy rotational here, just like no trading. I'd be looking to go short here, I'd be looking to go long here. And in this case, we have this nice acceptance down into here. We have these moves back. Now the question is, when do you go short, right? Like, if you have this move, right, all the way down here, do you go short here? Yeah. Do you go short here? Maybe. But man, this was a out of rhythm deep move down to here. I would expect maybe a bigger pullback, right? And so you can use RSI to kind of monitor. Here's, maybe an RSI location here I could look at, one of these two, because I've got, this stuff happening right here. I have, then this happens right here, right? Just this here. And then I got this stuff up here, right? Which is even better because I have all this support around my structural zones. I've got my developing value, I've got my moving average crossover, and I have my main structural location here, right? That's a great trade location. We had a nice move down, it came back up, and then we got another test of that. Maybe we were stopped out, but we're still in play because we haven't accepted above, right? And we haven't actually gotten up to here, so I'm not bullish yet. Okay. Now, my favorite setup using RSI is when I have two things happen. When I have this moving average crossover happen, obviously my narrative has to support this. So, remember we're bearish, right? And what I have is I have this move here, and then it comes up, and I have this switch, this changeover from green to red. And when do I get into this? Well, I could get into this here. Well, not quite there, but now I have the switch over here. But notice the rhythm. Like even though I have this nice switch over here, the rhythm's kind of shallow. So eyeballing this, I'd probably say, hey, this is a little bit shallow. But when this thing comes up to here, and I have this RSI that goes overbought right here, and I've got all this other stuff happening. What a great trade! This is one of my favorite trades to take. Is these changeovers from green to red, red to green, and then I get this nice RSI signal that happens. So you can take a look. There's other examples here that you can see as well. Now I want to go back and actually talk about this trade here. And I'll show another example of this, but RSI divergence is also one of my favorite things to see. So when you're trading RSI, sometimes you get these divergence patterns here. And a divergence pattern is when you make a new swing high, as an example, but you don't make a new high on your RSI from that prior swing. So this was my swing, my first swing, right? And I had, came up higher in RSI, but when I had this second swing right here, right? And here's my RSI down here. My RSI was lower than this one. That's divergence. And coupled with the fact that, hey, we're in this kind of main structural area up here, right? And I'm still short, I'm looking short. This was a really, really great trade to take right there. So I'll show some more examples of divergence a little bit later. Here's an example from CL again, just noting that this stuff works for CL as well. So I do have, if we take a look, I'm long above here. I'm kind of long above here too, kind of thinking, hey, maybe this will hold, but if not, then we want to go here. Everything kind of falls apart right here, right? And I'm not trying to give cherry pick examples all the time. Here's a really good example of where everything failed, right? So I have my structural area, I've got my RSI, we were rotational. Really the expectation is us to go back up, and I have, RSI, and probably even have some divergence here. So everything's lining up for this to go long, and it doesn't, it goes short. And that's okay, so that's a total loss right there. No big deal, why? Because what do we have now? Well, we have a contextual shift where we're short now. We come down here and we come down here. That is definite acceptance. And so now the question is, how do I get into this? Okay, do I get into this here? Nope, that's not good rhythm. How about right here? Nope, not good rhythm. How about right here? Yep, we got great rhythm. We have RSI supporting and confirming. And we're against all of this great stuff right here. And again, this is my first switch over. And we go short, and it's a great short move. All right, beautiful trade. And we even get another chance to come back in a little bit later right here. Again, we have the RSI. We're still short. We're still kind of in this downward trend movement. Okay, now what would you have to be careful of is that this might be destination, and that sellers don't want to go below that, and that's exactly what happened here. But that's kind of how it rolls. February 11th, 2022, really great example here of you've got this move up, okay? Now, granted, I am kind of thinking short right here in this environment, but we're also kind of dissonant because my VWAP's going up. I've got this in my green zone right here. So even though I'm kind of short structurally, I'm positive here. And that's kind of like a dangerous environment for me. I don't like those. I like to see everything lined up. So, how would you, kind of play this? As this thing goes up, am I looking to go long? Maybe. Even though this says long here, remember, do we have acceptance? So this is a really good example of how rhythm helps with acceptance. So do I have time and distance? No. I don't have either of those, and I also don't have rhythm. I have really shallow rhythm here, given this kind of move that goes up like this. Okay, when I see something like this, I'm expecting maybe a bit of a deeper pullback than that, right? I'd probably expect something like that to happen. That would be ideal. Okay, so this rhythm, even though RSI was working out right here, all of this. Maybe you take this if you're still really short and you kind of have a strong short idea and you think this is overextended. RSI can help you get into that. Where else are there areas to trade? Well, if I'm still long, if I still have this long idea, right, because I'm still green through here, maybe I look at this right here, RSI coming down here, right about there, and we have our long case. But again, I'm not necessarily looking long because I have this structural area. So because I had this nice bear move here, and now I have this, right? Now I have, against this structural area, I have RSI right here telling me, hey, this is probably a good spot. I've got all kinds of good stuff happening, and maybe I get into this one. Maybe this is just kind of an early get into it before this actually changes red. I don't have to do that. I can actually wait. I can wait till this turns gray, or actually turns red and then gray. So again, here's more examples, RSI in action. So we have this move down here, and we come back up. Either one of these is fine. I think this is actually a fine trade. Let me just kind of take a look at this one. It didn't work, but it actually, we had really good rhythm, a really good move back up. We're close to, this developing value area, and it's probably a decent trade to take, even though it ended up not working so well, right? We had RSI right there. This one, another chance to get in, RSI right there, and actually this one worked out, and if you held, obviously this one worked out all the way to the end. Okay. This is my, first, you can call maybe this one the first change, between here. Would I look at this one? Probably not, going up, because I didn't have enough acceptance above there on the bull side. But here, definitely, I've got the bears running. I have all this, main criteria and thesis that I'm going short. So I'm looking for this. I'm not looking for a bull move right around here, right? Contextually, I'm not looking for bulls. I'm not looking for a long. I'm looking for a short. So when is my short set up? It sets up right here, and I have RSI. And I have it here again, and I have it here again, and I have it here again. So love RSI for looking at this stuff. January 31st, CL, another really great example here, but also an example of where, you don't always get what you want from RSI. And I'll actually show a couple examples where RSI was like a miserable failure for me. So again, I'm short. This is my short thesis. I'm definitely under the structural area. So anything below here, I'm looking to short. And we make this nice move down. We have this move back up. That's tempting. Maybe you take that, and you'd have to keep it tight. But what a great move right back here. It's a two-legged pullback. You've got RSI. You've got all kinds of stuff going for it. This is definitely, I think, a pretty decent short, but it doesn't work out. I would have exited as it came up above here. But what you do have is you have this other setup right here. But notice I didn't have RSI come all the way up. But what I do have is I have divergence. I have a very, very mild RSI divergence to lean on. So, my purple arrows sometimes indicate that, hey, that was a setup, but probably not a perfect setup, and maybe difficult and challenging to access that trade. And again, coming back up to here, we make this move all the way down. We come back up, another short trade opportunity right here. And, came way up above here, and we get this little bit. And so the expectation is this thing's going to keep going, maybe back to retest that, right? But we already hit our destination, so maybe not, but it fails and we go up. But guess what we have set up for us? Yep, we've got our first changeover. Oops, we got our first changeover here, right? From red to green, actually went red, gray, green. And then we have our first real pullback with RSI support right there. So love it. That's a great trade. Okay. So as I've mentioned and as I've shown, RSI does not always work. And I found that in very strong trending environments, RSI can fail in terms of not actually delivering the signal that I needed to deliver. And so I kind of have to adjust my expectations in environments like this. So this is May 18th, 2022, same chart except with RSI. And just notice that, because we're in this hard trend, what we have is we have really shallow pullbacks. Okay, all these are pretty shallow pullbacks, right? All this stuff going on. Boom, 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 boom. Even down to here, we've got really shallow pullbacks. Now, if you're trading with RSI, you don't have a signal in this mess until all the way down here. Like, look how much value you've lost between up here and down here, waiting for RSI to finally trigger for you. So these environments are really tough because you don't have RSI to really lean on, okay? Because it never quite hits this overbought condition. When you have these pullbacks. And so what do? Well, this is where your brain comes into play. So you have to use your brain sometimes. And you might have to take a little bit more risk or a little bit more, not firm information to get in. Maybe I got in here, maybe I'd have to re-enter here, right? Have a shot right here. So there's still opportunities to get in, recognizing that you're in a hard trend and you have shallow pullbacks. Right? If you can recognize that you've got, a rhythm here where it's much more shallow than normal, right? Then you can trade this. You can also lean on your other tools. Like here's developing value, right? I can lean on developing value, right? When I come back up here, I'm gonna trade when it comes back up here to developing value every time. Just put a trade on. So you're gonna have to, sometimes use your brain, kind of ditch the RSI, use your brain in certain environments, and just go for it. I like this example to show off RSI divergence. So RSI divergence, again, is, I think, most powerful and useful in rotational fade environments. So when I'm in a rotational environment, and for me, I characterize a rotational environment. If I'm going back and forth across the developing value areas, then I'm definitely in a rotational environment until we break down from there. So you can see like we're pretty rotational. You can even see this pre-market. So just notice like we come here and then we come back up to here and we come here and then we come all the way back up to here in the open, right? So this is just confirming that we're pretty rotational, right? Until I see really good time and distance acceptance above this area, right? This, you can probably guess by now, I'm bullish above here and I'm bearish below here. This rhythm, this doesn't give me acceptance. There's no way like I would look at this and say, let's go long here because we're above this line, right? So when we talk about acceptance being time and distance also often impacts the rhythm, right? And so like distance, here's an example of distance is, I might see, something like, okay, so if you see something like this, okay, I don't have enough distance here, but if it came up to here, I've got probably enough distance because if it comes back to here, that's a nice pullback relative to this kind of a distance here, right? I mean, it's kind of like a third of a pullback, and that's reasonable, okay? But this little stuff right here, not enough. Not really enough. Okay, maybe down to here, that might be enough, but now I'm kind of like in this no man's land, right? So what am I looking for here? I'm still looking for shorts because, first of all, a lot of times things pop above my lines in the sand, my areas. Remember, these are areas. So I'm still kind of looking for shorts. So how would you access a trade like this? Well, divergence can actually help out. If I have a belief that I'm rotational, right? And I do have that belief here, I'm rotational. This kind of big move here is out of rhythm, right? You don't take that one, but look at what happens here where you set this up. So we have this here, new high, and we have this right here. We have RSI divergence between these two. So this might be a reasonable, right here, a reasonable short here, or when it comes back, maybe you try to get in there later. So really good example of divergence. And guess what? We get divergence multiple times during this particular day. We get it right here. So we've got this here. We got that there. That's divergence. We get it right here. And we get it right here. That's divergence, right? So we get divergence, several times during this rotational environment. Where we don't get divergence, we're not going to get it when we make moves that go like this. So we're now have a change in our market condition. We're now looking for shorts, definitely short through here. And we're looking for maybe stuff that isn't as deep of pullbacks, right? And that, again, you're in a hard trend, you may not get the RSI read that you want. So that's RSI and using your brain to identify rhythm. Again, all of this stuff connects together. You want to have a narrative. You want to be able to look at acceptance in an intelligent way and make sure that your narrative lines in the sand are in play. You use developing value to help determine what happens between these lines in the sand and help you kind of get into good trades with risk reward. And of course, rhythm helps you to time that risk reward in a much better way. And we will next time talk about order flow, where we go into specifically what I look at from an order flow perspective to execute my trades. That's it for today. Till next time, happy trading.